The debit credit event is one of our most versatile events and can be used to model almost any accounting style transaction, both with an initial amount that you can apply to an account and also a contra account to more closely mimic real transactions in an accounting package. We're going to look at three different examples here: a debit example, a credit example, and how we can use this event to model amortization over a period of time. In the first, debit, we are setting a monthly operating expense. We use the debit state and an ongoing expense. Here the expense is $20,000 monthly, and we're starting in June 1st of 2022. We're able to pick the type of account that we want to target here. Here it is an operating expense. And the default contra account is cash. Here we can see the expense showing up starting in June, $20,000 month over month for the duration of the scenario. In our next example, we're looking at using the credit state here. Here we're modeling expected weekly revenue over a period of time. Difference here, $45,000. Using the credit tab, we have set the cadence to be weekly, and the account that we are targeting is income with a contra account of cash. Here you'll notice the weekly revenue coming in month over month. These extra spikes are because every few months there's an extra week associated, and that is why you're seeing an irregular pattern here. In our last example, we're going to look at amortization. Amortization is the ability to spread a transaction over a period of time. In this case, we are adding an expense and we are amortizing it over 3 months. Here we set the state from ongoing expense to being an amortized expense. The value of this is $80,000. The frequency is monthly. This could be changed to other frequencies or cadences over a period of 3 months here, starting in July 1st of 2023. Our blue box value here automatically displays what the monthly value of that will be over this period of time. And here we've set expenses as our target account and cash as our default contra account. And now you can see those 3 transactions spread over 3 months, $80,000 divided by 3. And that is how you use the debit credit event to model multiple types of accounting style transactions.